Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up, your weekend edition for what a crazy day, Friday, and we are on the 10th of March, 2023. It's your weekend. So as we look at the markets and we try to figure out what went on its own, the jobs data showed a wobble, a minor one. I mean, that big. The wobble was that we saw that the payroll, the labor cost dropped a little bit. We saw the unemployment jump 0.2 to 3.6 from 3.4. And what was the rationale behind it? Well, the labor force participation picked up 0.1. That was it. The headline number was still 311,000 jobs strong. So on its own, I'm looking at the number going, okay, the market's fighting about different things back and forth, but I'm going, this is not a bad number. This is puts into play the very strong possibility of 50 basis points. And the market looked at it and said, no, I don't think so. We're under 50% again. I didn't get that completely. Then the news about, as you know, overnight, SVB Bank. Market was down last night about 60% or so. And then they suspend trading. And all of a sudden, this monster bank, it's a big bank, folks. It's not a JP Morgan. It's not a Chase. It's not one of those. That's not what I'm saying. It's, though, a big bank and very, very popular bank in Silicon Valley. And a lot of the startups there have their money there. And there's a problem. This bank is out of business. Could it be picked up by somebody? Possibly. I've seen the FDIC do deals, and they can guarantee money. You know, we had Countryside. You remember all that. There's things that could happen. But this is the second largest failure I remember. And now we have to see just how it's all going to pan out. It scares people in thinking, okay, if this happened in Silicon, what's going to happen in other banks that have exposure to real estate? Remember, we've seen it, what was it, Brookfield and some of the other big companies are balking at paying. They're going into the default status with certain buildings. How many more of those? I mean, I live in Chicago. Big problems here with downtown Chicago. A lot of vacancies, and I'm sure that's the case in other big cities as well. Buildings need to be possibly repurposed. Well, whatever the case is going to be, where does it lead us? So now we get CPI, PPI, and we're going to get the European Central Bank coming with their numbers. And then on the 22nd, we go the other case. So there's an awful lot to digest. And I invite you to read my newsletters about it. I already began writing this week's letter for the weekend, and I'm telling you, I'm going to be covering this in great detail. I've already done it. I've written that part of the letter in a way you'll understand what went on, how the bank got into the problem, how Peter Thiel, when he said and warned people, hey, they're losing, they just lost $1.8 billion on having to sell securities. Now, the bank wasn't in financial trouble. Their customers were. Their customers wanted to take money because there's not a lot going on right now in the VC area with interest rates this high. So as that happened, and as the bank sale of stock to two different tranches they were going to do for $2.3 billion became known, on its own, it picked up momentum. And before you knew it, here you go with one of the largest failures. And where there's that, there could be contagion everywhere else. So how did the stock market react? Well, you can see it right behind me. The markets that got the bid were clearly the gold market, the euro. The yen would be another one right over here. The British pound even got a bid over the dollar. Obviously, big bids in the bonds and the note market. I mean, big ones that came in there. And other markets even didn't get hurt because as the dollar fell today, you started putting a bid under commodities priced in dollars. It's confusing, admittedly, but I'm giving you and I'm writing about it. It's almost like a special report. So if you'd like to get my reports, I tell you to do this now. Move your cursor up here, free offers, go in on the free offer page, sign up for my research there. You'll get a couple of weeks of it. Now you'll be able to get the report by Sunday. I'll make sure everybody that signs up gets to see it, okay? All right. So we look at the S&P, and on a monthly basis, we have not been, Louis, can you fix this? Move this cursor. I'm not going to start over again, folks. There we are. As you can see on the chart right here, we stayed under the monthly number. So as we stay under the monthly number, that keeps the bias down. Now, on a weekly basis, we had been fighting, you saw it all week long, at the 18-week average of closes, where you're going to be over it, under it by 3-4 points the whole time. Now you're under it. And what's the pattern? Now you got lower highs, lower lows. You're back into the downtrend. On rallies, what the market was fighting at, the 39.91 level, and that from here is 130 points away, that'll be a resistance zone, in my opinion. When we take a look at a weekly chart, market down, not out, but down. Lower highs, now you have an outside week down. Do you know how to work with the outside weeks? Do you know the importance of taking this high out in the next 2 weeks if it occurs? And if it doesn't, where could the market be headed? We cover that in one of our courses on our website under education. The battleground is crystal clear. There's that 39.91, and we'll call it a half zone. The market, if it comes down, one of the numbers might be here, the Bollinger Band. It's in front of the 200-week average of closes, and momentum is fresh to the downside, not oversold. The market's entered bear market territory, in my opinion, again, calling for a possible test of 38.15. If that gives ground, then the 37.25 area. In the Dow, you narrowed in very dramatically, and let's step back just right to here. See how you've narrowed in? And whenever that happens, I say, I don't know which way that market's going to break out. We've been going just drifting sideways. So what happens next? The market goes up this week early on, challenges the 18-week and the 100-week average, and then with today's data, everything lets loose. So it's the first move underneath the Bollinger Band. If this week that we're entering has a lower close than this, and in the bottom quadrant of the week, it's a downside breakout, and I would be looking for the 30,600 level. If it can't do that, then I think it'll climb back up into the Bollinger Bands. Not bullish. The band's going to fall come when we reopen this week, so keep your eye on that. That is how this market is going to look. Then we get to the NASDAQ, which didn't want to close under the 18-week average. Yes, the trend is down, but the bias is up. So if you get under that, because you couldn't even do that today, I would expect that you're going to get battleground. Who would think the NASDAQ would be one of the stronger ones? But it was. And in the Russell, it just let go. So this is joined into the bear camp. Lower highs, lower lows under both the 200-week average and the 18. You've opened the door up to get back to the 1727 level in my eyes. Then in the bond market, okay, a bear market rally according to the chart action. Let me show you why, and we'll take one more look here. This is the market on the 3rd. Lower highs, lower lows. Oversold. You do see that. I view any reading in the slow stochastic under 30 as being oversold. This week, the market has gotten up to a 38.9 reading. And where did it stop? Right here. This is where I expect the market to wobble. It won't wobble if we get a lot of terrible economic news about banks, and there's another bank that shows up out of nowhere. But I think for the moment being, SVB and Silvergate are two banks behind us. What's common about both banks? Very focused on a certain niche in the market. Crypto on one, startups, tech in the other. You know, Roku's involved in, and I understand I read an article on it on SVB. Number two, we don't know that there won't be a lot of money coming back to everybody on SVB. Accounts are insured for $250,000 with FDIC insurance, which this bank has. Not beyond that. But everything I was reading on the balance sheet did not say this bank can't cover that loss and distribute the money to the people with deposits. The negative, and there is a negative, what is it? Why don't one of the big banks pick it up if that's the case? They tried to find a suitor, they didn't. Somebody out there will with federal guarantees. If they had a good experience with Countryside. If they had a bad one, forget it. Because the government has a way of saying, sure, come on in, we'll take care of you, and then they fight with you down the road. So we got to be very careful of that. A lot is going to come out over the weekend, so be aware of that. The more news that's good, the worse it is for the bond market. This is just a bear market rally, and it probably slips back. Even more so would be the case in the 10-year. So I'm looking for the market there. And these markets are right in the way of the PPI, CPI numbers. So what does the Fed do? The Fed's looking at this, you know it. They don't want to tip the banking system over. It's only 2 banks. And as I said, very much niche banks. As big as SVB is, it was a niche bank. If you take a look at other banks, and that's part of the report that I'm putting together that I've got, I'll have some articles that relate to it. I show you the assets of the big banks, where they're at. So it's a very, very interesting article. You want to get it, I promise you. It's like a special report. In any case, so I'm going to look for the resistance up here. And obviously, I'm going to be looking all weekend. Is there another shoe dropping? But if not, I'm expecting to see rallying into resistance, and wouldn't surprise me if selling develops, because at the end of the day, if this banking thing is not a huge, huge issue with more fatalities to come, then the market has to go back and consider PPI, CPI, what's going to happen all through that. I do think the market will probably not see 50 basis points out of the Fed purely because of this banking 2 weeks in a row fiasco. Why not slow it down to 25 points and give yourself a little bit of time? That's what I think is going to happen. When we look here at the dollar index, people were not running for the dollar. I think that's crystal clear in it. It is in an uptrend. It's fighting it to stay above the 18-week average of closes. In the euro, the market's trying to climb back to that particular number. They didn't run on a weekly basis to the euro. The Canadian went down to the lower band. And what's wrong there? Well, what's wrong is they want to hold steady on rates and everybody else is going up. This week, we'll see the European Central Bank. I'll bet it goes up 50 basis points. The week after, we're going up. And right after us, the day after us on the 22nd, the Bank of England, who knows what they're going to do, but they'll be looking very hard. Their economy, a couple of numbers came out, the bank, for the UK that were improvements in their economy. Then we get to the yen, which did nothing with their interest rate, so we've had a break. And today's rally carried this market into good gain for the week. Why? Where do you run in times of uncertainty? People run to the yen traditionally. So gold and this market got bids on that. Bitcoin in trouble, back down, challenging the 18-week average. Momentum has turned. Trend has not turned. There is no trend. The market had been an uptrend. Now it's got itself a set of problems, which you'd expect. Just think of Silvergate. That's been the negative all week long. Now another bank. Who knows where this story goes? Now we come to the Brent versus WTI, and you're right back to neutrality, just sitting on the differential of $6. One's not got an edge on the other at this point, and you're fighting a battle all week. In fact, it's week after week at the 18-week average of closes. And the rationale here is if we keep raising interest rates and we hear all these bad things and we have to keep going and protecting things, it's a tax on energy, one way or the other. So that's what you look at. If the Fed's going to keep going a quarter or half a point each time, it takes money away. The consumer doesn't have that discretionary money. Whatever the taxes are on that, that's what it is, whatever the price. So that's weighing on this market at this point in time. Same in the WTI crude. The markets need to close over their 18-week average to be friendly. Gasoline got right up where I wanted it to. Should fail from here, hoping it comes back down, and then we start looking at the spring again together. But I'm very excited because my analysis was pretty much on the money there. So I'd like you to join me with everything that we're doing in terms of my research. You know, I don't promote it that much, but you can get a couple of weeks free of my research. It'll give you not only the special report, I'll call it a special because it's going to be a big one for Sunday night, but then we'll give you a couple-week access to see what our paid subscribers see in the morning when I give them specific trade. Buy here, sell there, do this. Here's the reason. Here's what you do. And times when I tell you, like this week, we had one set of trades early in the week. It was great. And I said, put your hands in your pocket. There's nothing else to do in the futures. And that's where we were going into today. So I'm a camper that's walking out of this totally unscathed, at least in terms of the recommendations I gave. So do you like to see this? You watch this often? Take a look at it. All you need to do is come up here, move your cursor, and you go right to the website, the free offer site. Otherwise, it's iraepstein.com. It's pretty easy. It's my name. You do that, and you'll be right into the website, and away you go from there. I'm Ira. You have yourself a great weekend. I'm going to be writing and recording all weekend, and this is how you get to us. Remember that. You take care.